consider applicable taxes as well as tax exemptions from the outset, Uzbekistan offers a number of tax exemptions depending on industry, location, and volume of investment. Careful considerations will allow you to optimize your tax burden. Special tax exemptions for individual projects. The government is not inclined to offer special individual incentives for projects in strategic industries, inter alia in processing and manufacturing of high value-added products. That said, individual tax exemptions are not available, excluding ones granted based on investment agreements and resolutions of the President, for up to 50% of the prevailing tax rates. The tax authorities have adopted a risk-based approach for tax administration purposes. A big data system analyzes the business activities of taxpayers and sorts them into red, high risk, yellow, medium risk, and green, low risk categories. Red flag taxpayers are subject to regular tax audits and are not allowed to set off incoming value-added taxes. Yellow flagged taxpayers are also closely monitored by the tax authorities. Green taxpayers are free to use any tax exemptions and are not subject to regular tax audits. The moment a company has been registered, it is obliged to file tax, statistical, and financial reports. Failure to file due reports on a timely basis can lead to administrative sanctions on officials of the company. Even though statutory accounting and tax reporting has moved online, Uzbek tax law has strict rules on bookkeeping. In order to maintain bookkeeping, the company needs qualified personnel with the relevant experience. Failure to maintain the prescribed bookkeeping and documents could lead to financial sanctions for the company. From January 1, 2021, joint stock companies, commercial banks, insurance companies, and legal entities classified as major taxpayers are obliged to do their accounting based on IFRS. For all other businesses, it is only an option to prepare their financial statements in accordance with IFRS, in which case they would be exempted from preparing the financial statements in accordance with Uzbek account standards. Should they choose not to apply IFRS, they must comply with the national accounting standards. From January 1, 2022, rules of the tax code on transfer pricing entered into force. These rules seek to eliminate tax evasion and movement of income to more favorable tax zones, take strict control over transactions between affiliated persons, cross-border transactions, and operations with offshore dons. The adopted rules on transfer pricing provide full taxation of value-added tax, corporate income tax, subsoil tax, personal income tax, and excise tax. Taxpayers are obliged to notify tax bodies of such controlled transaction within a month. All the permanent establishments have formally status of non-residents. In fact, they pay all taxes which can be applied for Uzbek residents, including value-added tax. This means that invoices issued by foreign entities operating through permanent establishments may need to reflect value-added tax. All businesses must issue their invoices electronically using the approved operators of electronic invoicing whose systems are integrated with the IT infrastructure of the tax authorities.